Welcome to Business with Louis, the show where we explore the world of entrepreneurship and business concepts to help you succeed in today's fast-paced market. Currency fluctuations refer to the changes in the value of one currency relative to another. This concept is essential for businesses and entrepreneurs because it can significantly impact their profits, losses, and overall competitiveness in the global market. To understand why currencies fluctuate, let's first look at some historical background. The exchange rate system has evolved over time, from fixed exchange rates to floating exchange rates, allowing currencies to fluctuate based on supply and demand. One key concept is the law of supply and demand. When a country's economy is strong, its currency tends to appreciate in value because investors are more likely to invest in that country, increasing demand for its currency. On the other hand, if a country's economy is weak, its currency may depreciate as investors lose confidence and sell their holdings. Another important factor is interest rates. Higher interest rates in one country can attract foreign investors, causing its currency to appreciate. Influential thinkers like Milton Friedman have contributed significantly to our understanding of exchange rates and the role of monetary policy in influencing currency fluctuations. The efficient market hypothesis, which suggests that financial markets reflect all available information, also plays a crucial role in understanding how currencies fluctuate. Our understanding of currency fluctuations has evolved over time as global trade and investment have increased, making it more complex and interconnected. Let's look at some real-world examples to illustrate how currency fluctuations play out in practice. The Brexit referendum in 2016 is a notable example. When the UK voted to leave the European Union, the value of the British pound dropped significantly against other major currencies like the US dollar and euro. This had a profound impact on businesses that relied on international trade, with some companies benefiting from the weaker pound while others faced increased costs. Another example is the impact of the COVID-19 pandemic on currency markets. As countries implemented lockdowns and travel restrictions, the demand for certain currencies decreased, causing their value to drop. For instance, the Australian dollar, which is heavily influenced by commodity prices and tourism, saw significant fluctuations during the pandemic. So, how can businesses and entrepreneurs apply this knowledge in practice? First, it's essential to understand your exposure to currency risk. If you're importing or exporting goods, changes in exchange rates can affect your profit margins. One strategy to mitigate this risk is through hedging, which involves using financial instruments like forward contracts or options to lock in an exchange rate for future transactions. Diversifying your supply chain and revenue streams can also help reduce dependency on any one currency or market. For example, a company that exports products to multiple countries can benefit from a weaker currency in one market while being protected from fluctuations in another. Staying informed about economic indicators such as GDP growth rates, inflation, and interest rate decisions is crucial for anticipating potential changes in exchange rates. To take your understanding of currency fluctuations to the next level, I recommend exploring resources like the International Monetary Fund's exchange rate data or the Bank for International Settlements research on international finance. These organizations provide valuable insights and analysis on global economic trends and their impact on currency markets. In conclusion, understanding why currencies fluctuate is vital for businesses and entrepreneurs operating in today's interconnected world. By grasping the principles of supply and demand, interest rates, and the role of monetary policy, you can better navigate the challenges and opportunities presented by exchange rate movements. Remember, staying ahead of the curve requires continuous learning and adaptation. As the great economist John Maynard Keynes once said, the important thing is not to stop questioning. Curiosity has its own reason for existence. That's it for today's Business with Louis. Be sure to like, share, and subscribe, and remember, every great business starts with action. Make your next move count.